Welcome to my channel Equity Mantra. In today's session, we'll understand what is ETF, what are the advantages of ETF, and how ETFs are taxed in India. So, what is ETF? An exchange traded fund is a type of investment fund that is traded on stock exchange. It is quite similar to the stocks, and ETFs are designed to track the performance of a specific index, sector, commodity, or asset class. ETFs have the features of both shares and mutual funds. They are generally traded in stock market, bought and sold as per the demand and supply factors during the trading. ETFs price depends on the net asset value of their underlying assets. Moreover, the dividend that the shareholders finally receive depends on the overall performance of the concerned ETF. Now, let's see what are the different types of ETF. So ETFs are categorized into four different types. So if you look at, there are four different types of ETF, which are equity ETF. Equity ETF invest in equity shares and other equity related instruments. Then we have debt ETF. What is debt ETF? ETFs that invest in the fixed return securities like bonds and debentures are known as debt ETF. Gold ETF, which invest in physical gold assets, and currency ETF. So currency ETF that invest in the currency instruments. Now let's see what are the advantages of ETFs. The first advantage is diversification. ETFs provides a lot of diversification and can track a broader range of stocks. So one ETF can give exposure to an array of market segments, a group of equities across different sectors. And the second advantage is it trades like a stock. So while ETF comes with a lot of diversification benefits, they also have liquidity of equities like stocks. So ETFs can be sold short. It is also possible to purchase them on a margin too. And the second is their prices are continuously updated throughout the day like stocks. And the third one is these are tax efficient. So the passively managed ETFs attract lesser capital gain taxes and therefore more tax efficient. If you look at the mutual fund in the similar category, those are actively managed and therefore they are not as tax efficient as ETFs. Now let's take a look at the income tax on ETFs, which is most interesting part because we all want to invest on ETF. So as I mentioned earlier, there are four different categories of ETFs. So among those four categories, the equity ETF for the holding period for equity ETF is 12 months if you want to avail the long-term capital gain advantage. So what happens in long-term capital gain? If you're holding an ETF for more than 12 months, then up to 1 lakh, it is non-taxable. So it is 10% in excess of 1 lakh under section 112A. So whatever capital gain you'll have more than 1 lakh, you'll be taxed 10% on that. And for short-term capital gain, if you're selling an ETF within 12 months or before 12 months, then you have to pay 15% on the capital gain under section 111A plus 4% cess. And in other ETF, which is like currency ETF, debt ETF, gold ETF, so the period of holding is 36 months for the long-term capital gain. So if you're holding it for 36 months and above, then you have to pay 20% tax with indexation. So now what is indexation? So indexation is primarily used to assess the sum of total gains or losses that incurred on investment against the inflation effect. And if we are selling these ETFs, gold, debt, and currency ETF, before 36 months, then you will be taxed as per income tax slab rates because those will be short-term capital gain. Now let's take a look between the difference between the ETF and a mutual fund. The first difference is in terms of trading and liquidity. So ETFs are traded on stock exchange like any other stocks, which makes them more liquid, whereas the mutual funds can only be bought or sold at the end of the day at the NAV price. NAV is the net asset value of the stock or the mutual fund. What is the cost structure? So in terms of cost structure, ETFs are also they usually have lower expense ratio, whereas the mutual funds have higher management fees. And in terms of investment approach, ETFs are passively managed, which means the fund mirrors a particular index, making them less risky and transparent, whereas mutual funds are actively managed, which means the fund managers invest in securities based on their analysis and market outlook. And another interesting thing about ETF is investment amount. So ETFs allow the investor to start with smaller amounts. Like stocks, you can buy one stock, two stock, 10 stock, 100 stocks. Similarly, you can buy ETFs with a smaller amount. But in mutual fund, it requires a high minimum investment value. You might have noticed that when you invest in a mutual fund, somewhere it is minimum investment value is 500. In some places it is 5,000. So that's why the minimum fund required is little higher in case of mutual fund. Now coming to the taxation, ETFs are more tax efficient as they have a lower capital gain taxes, whereas mutual funds are less tax efficient. Now, let's go to the portal where I'll show you. This is the NSE portal. I'll show you here what are the different ETFs that we have, and also I'll walk you through how to check the portfolio of an ETF before you start investing in ETF. So if you come here, this is an NSE website. These are all the exchange traded funds. If you scroll down, you'll see a lot of ETFs listed here. And here you can see what are the open price, what is the higher price, or the previous closure, last trading price, and all that. So for an example, if I have to check the portfolio, let's say I want to check ITBs. So this ITBs is Nippon India ETF Nifty IT. So if I go to money control and look for this ETF, so this is the ETF. If you scroll down, here you'll see what are the how many stocks are there in the portfolio. So here it is 10. And if you scroll more, you will see the holding of those 10 stocks in the portfolio. So in the ITBs, the maximum shareholding is of Infosys, which is 27.02%, followed by TCS, which is 25.50%, and you'll see all the uh, companies that are part of this portfolio. So this is how you check the portfolio of an ETF before you invest in an ETF. So I hope this video helped you to learn the basics about ETF, how ETFs are taxed, and how to check the portfolio. Please like and share my video and subscribe to my channel for regular updates. Thanks for watching.